أعوذ بالله السميع العليم من الشيطان الرجيم بسم الله الرحمن الرحيم. This is a section regarding capital markets for those who are interested in earning an honest living, working hard, and learning how a certain system works and what our capital markets are defined as in certain financial texts. This says, and of course this book is regarding American Financial or Association for Financial Professionals, an internationally recognized group that teaches financial specialists what different terms mean and what different calculations can do to enhance and increase wealth for everyone. Number one, it states capital markets can be divided into two basic segments. A debt market, which includes fixed income capital, such as bond securities and term loans. The next is equity markets, which include securities such as shares of common and preferred stocks. The next question or idea here is, what are key participants in capital markets? The key participants in a capital market are those who are issuing securities, investors who buy those securities, the brokers and dealers who help make the market function, then those who are considered regulators who ensure that a level playing field is provided and the rules are adhered to within the spirit of generating wealth, health, and thriving economies. The next point to mention here is different issuers of securities in capital markets include governments, central banks, corporations, state-owned enterprises, sub-sovereign entities, and mutual fund companies. The next point to be aware of when you're treading down this path of becoming an expert at financial growth, wealth generation, healthy markets, and thriving economies is to understand the difference between retail and institutional investors. Retail investors are typically individuals buying small amounts of stocks and bonds who are looking at their own investment portfolios. They're a large source of demand for investment vehicles. In large measure, they're relied upon by issuers as a very important source of capital. On the other hand, institutional investors arrive in many different forms. They can generally be described as large-scale investors, and they may include insurance brokers, money managers, pensions, corporations, banks, different types of fund companies that purchase large blocks of securities on behalf of others, as well as manage their own portfolios.